is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Love is kind and just. When you're in love, a smile's on your face. You feel good about yourself, and because you're happy, you are kind. Love is also just. When you make a mistake, you pay only once for that mistake. Market-wise, let's take a look at it out here. We have the Dow Industrials down 163, NASDAQ down 41, S&P's down 15, gold contract up $1, trading at $1,324 an ounce. Silver up a penny at $19.13 an ounce. Platinum down $3 at $1,026 an ounce. Copper flat at $2.18 a pound. Light sweet crude up 57 cents, trading at $47.62 a barrel. Notes, 10-year note up 2 ticks, 131.16. 30-year bond up 8 ticks, 169.16. King dollar up 144 ticks, trading at 95.48. The euro is at 112, and the yen is at 110.10. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so this is what we have, folks. Excuse me. Yesterday, you had the SPY, got up to a price point of $216.82. What that had done is got through the gap from this Monday. The benchmark is the gap from from September 9th. The high of that inside the SPY is $217.03. Bottom line, all the SPY could do today is get over the high of yesterday and not only give it up, but you're giving it up on volume. So now what you're doing is that we already have 95 million shares traded. That's after hitting a high yesterday at 87 million shares. That's after hitting the high of the 22nd with 76 million shares. This is going to make its way down to the 212.31 area. And we'll see if we continue to get an expansion of volume. We do have an expansion of volume out here today. Dow Industrials. Dow did the exact same setup. So Dow Industrials, had gone through the gap from Monday. The benchmark is 18,404. Couldn't make it to the benchmark. Now, when you can't make it to the benchmark and you get through, you got through Monday, bottom line, that's more bearish because it should have been able to have follow through and we're not talking a lot of points here, make it up to that area. Number one, it didn't make it up. Number two, what do you got? You got a sell-off. You get some volume behind the move on the way down. NDX. Well, no. First, the NASDAQ composite. So, in the composite, this is what we have. The composite is down $40 right now. We're trading at 52.78. 52.75 gets you back inside the lower range. And this is going to be, it's really wild because the bottom line is this. The NDX 100 and the composite broke topside. We broke topside the day the Fed came out and didn't raise rates, which was on the 21st. Once you break topside, you have every right to not only go topside, but to get follow through. The NDX, as the composite, has not got what it needs to get away from this whole area. If we take a look at the NDX 100, right now at 48.43, and 48.36 is the number. So the NDX 100 is still above it. Bottom line, what I expect you're going to see here is that you're going to see the Dow and the S&Ps, they're yanking the NDX 100 as well as the NASDAQ into lower ranges once again. Gold contract. What do we have with the gold contract? Gold contract out here, sideways move. You have a low today of $1,318, a high of $1,329. You have 141,000 contracts. This is making its way down to this 1310 area. We're coming into Friday. I expect what you're going to see more than likely is that we're going to hit into that area tomorrow. The note market. We take a look at the notes. This is what we have with the notes. Notes out here today. You have a low of 131.05, a high of 131.12. You've done 1 million contracts, and what it looks that the 131.14, it actually, you know, yeah, this is pushing, and it's pushing that swing point now with volume. So these notes and the bonds are not done once again. This is pretty amazing. I mean, this is saying that, you know, notes are going to go higher. And so what that also would be saying is that it's not going to be the interest rates that bottom line go up in order to get this market in trouble. That's why it seems to look right now. The 30-year bond is not, the 10-year note is out of the woods. The 30-year bond is not out of the woods yet. 30-year bond has to get up into the 171.01 area. King dollar, what do we have with King dollar? King dollar, another sideways move out here today. Looks a little bit stronger than the last few days. What King dollar has done on a continual basis is that it's rejected lower price each and every time with lighter volume. Now you're building cause, and you're building cause to get up into the swing point for 96.21, as well as I expect the July swing point high here of 97.61. Our phone number is 877-927-6648. Yeah, and if you do go over to Wells Fargo, what you're going to see, that Wells Fargo CEO, he's going to be gone, folks. Wells Fargo today is down 80 cents. You are breaking swing lows. You're breaking them with volume. You got another ABC structure on the way down. And I suspect what you're probably going to see is that he's going to resign the next, who knows, week, 2 weeks, whatever that is. What Wells Fargo got hit with at about 1 o'clock this afternoon was a criminal investigation by the Justice Department. And what that's all about is repossessing service members' cars illegally. Illegally. Okay, the thing that's so bizarre, right, folks, okay, is that, so I'm sure most of us are always got a loan. If you haven't got one, you know that if you actually read the loan documents, inside the loan documents, what happens is that if you're in the service or you in the reserves and you get called up, what happens in these loan documents is that there's a clause, and that clause would give someone that's in the service a longer time to catch up and to not foreclose on them. And the reason for that, of course, is that when someone gets called up, you can have a job 1 second, right? Whether you're making $1,000 a week, $500 a week, and then the next second, your life's disrupted, you gotta take care of your house, you gotta go overseas. Bottom line, you know, they foreclosed on them. They took their cars. So bottom line, it's time for him to get canned. You stay right there. We'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 163. You get the NASDAQ off 40. S&Ps are down 15. Percentage-wise, this is what we have out here, folks, is that you have the Dow off 0.8%, S&Ps off 0.7, NASDAQ off 0.7. Intraday out here, so check it out intraday. Intraday, we're down 161 in the Dow, but intraday, the Dow had got down to 18,091. Which is, my God, that's, well, 70, that's another 80 points. So that was like down 250. And what that was all about, if we go over to Deutsche Bank, what you're going to see is this. And this is not going to stop, by the way, folks. So Deutsche Bank is going into its swing low, monster volume. You're going in 45 million shares. Last low that was established out here was on Monday. So Monday you had 20 million shares. You're going in there with 45 million. And what was going on is this, is that came across the tape that a number of funds that clear derivatives trades with Deutsche Bank have withdrawn some excess cash and positions held at the lender, a sign that counterparties mounting concerns about doing business with Europe's largest bank. Now, so what you get is this. This is how this shakes out, folks. And this is a rerun. It's a rerun of basically a run on a bank, a financial run on a bank. And Deutsche Bank happens to have on their balance sheet, it's 1.3 trillion. This is like an outrageous number. Now, I'm going to grab this, but I believe on their balance sheet is 1.3 trillion. So what happens is this. Is that banks in general, okay, don't have funds if everyone wants their funds back at the same time. That's just the nature of the business, okay? Now, that's a depository business. What's happening with the derivative part of the business and the clearing part of the business, okay, is a different situation. And what that is this, is that you are doing business. So picture that we all are doing business just with your own broker-dealer. So you have your money at your broker-dealer. What ends up happening is that you decide that you don't want your broker-dealer to have your money. Now, you may have trades on, you may not have trades on. Well, guess what? If we all went and we decided to just withdraw those funds simultaneously, it's going to put pressure on the financial foundation of the bank. The reason being is that every single day, those funds get pushed out. So what does that do in turn? What that does in turn is that banks are a trust issue. So if the large institutions start worrying that something is going to happen and they can't get their money when they want it. This is not a situation I would, the German government will come in and save them. This is not a situation, my take on it is that the bank will go down the tubes and people won't get their money. This is a situation that anyone that's been around long enough knows that you don't want the money hung up. I don't care whether it's 5 days, 10 days, 20 days, whatever that is. That's what's going on. And so now watch what the next step is. The next step is, as this comes across the tape, right? Now I want you to put yourself in the position that you're a money manager. You have other people's money. You have other funds' money. Guess what? You know what's happening in your phone right now? You're getting calls. They're asking you, do you have money at Deutsche Bank? They want it out. So we're going to see some heavy volatility continue, and I suspect more than likely next week, the week afterwards, what you're going to have is that either the government, the German government's going to have to come out and back them up. That's because once it starts, and as a couple Mitch was talking about, it's a replay, and it is a replay, by the way. Okay, I don't expect it's going to be like a 2008 replay going across all banking structures, but it's definitely going to hurt many players, and it's going to bring a few players down. That's how this, because the music is playing, man. They're all going to face the music right now, and that music is not good. This is one shark eating another shark. That's how it's shaking out. Let's take a look at some of the high vol. Well, actually, let's go over to the IBB. So the IBB is breaking down. And the IBB, folks, is always a decent indication for the NASDAQ that the NASDAQ's getting weaker. The IBB is down $8.50 today. You're doing 1.2 million shares. That's after making a high with 1 million shares. Bottom line, IBB is going after this swing low of 276. What I expect you're going to see is it's actually going to go after the June swing low out here of $240. Some of the higher volume stocks in this market, and we'll have volume in this market today. We already have volume. We take a look at, okay, so you got Procter & Gamble down $1.35. You have Qualcomm up $3.24. Excuse me, folks. Transocean is up 61 cents. You get Micron Tech up 10 cents. Inside the Dow Industrials, the weakness versus the strength. There's two stocks that are strong in the Dow Industrials. You have Caterpillar up 1.5%. Verizon up 0.2%. Taken away from it, Goldman Sachs is down 2.9. You have Merck down 2. Nike's down 1.75. Johnson & Johnson is off 1.7. Let's go over and take a look at good old Goldman Sachs, since they have their hands in everything. And so Goldman's in its lower range. Bottom line, Goldman also has a high volume low at 138, and you're at 158. Inside the NDX 100, what do we have? NDX 100, the strength out here is NXPI. That's getting taken over by Qualcomm, I believe. Yeah, Qualcomm. The market likes both of them. Qualcomm is up 5%. NXPI is up 15%. Viacom, who wants to get back together with CBS, is up 2.7%. And taken away from it, Mylan Pharmaceutical is down 4.8%. Vertex Pharmaceutical is down 3.8%. You have BioMarlin down 3.5%, and Regeneron is down 3%. Bottom line, go over to the NASDAQ composite, because when the IBB goes south, folks, that's when you have to watch out the composite. For some reason, it's a good part of the composite, but all the other small stocks, they start going south also. So right now the composite's down 44 at 52.74. And if you close under 52.75, guess what? You're back in the lower range again, and that's about as deviant as you can get. That we break out, you stay outside for 2 days, you get back inside, it peeks its head out yesterday, and then it gives it up, and it gives it up again in spades. And it gives it up in the aspect that you're in window dressing, and you know what? You should have some natural buying right now. And guess what? I suspect what's happening is that any fund that is up, because it's been a tough year for funds, period, they're probably buttoning down the hatches, and they're saying, hey, listen, guess what? If I'm up 3%, 4%, 5%, whatever that is, I only have to stay flat for 90 days. Big deal. They stay flat for 90 days, they take the bread off the table, and that's what I expect you're seeing out here right now. Dow Industrials are down 185. You get the NASDAQ off 47. S&Ps are down 18. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down to $155. You get the NASDAQ off 41. S&Ps are up 15. Let's go over to Qualcomm, and we'll take a look at Qualcomm. So Qualcomm right now trading up $3.55. Has volume, has all of the above. Qualcomm stocks jumped as much as 8.5% on a report that is considering purchasing NXP Semiconductor in a deal that would be valued at $30 billion. Shares of NXP, the biggest maker of chips used in the automotive industry, also rallied as much as 19% after Wall Street Journal reported that the companies are in talks to combine. So this is pretty intense, man. Let me pull a look at this. So they definitely like what's going on here. So this probably did an ABC up in one day. So your A point on this is 50. Your B is 62, so you get $12, which gives you 72. So we got to 68. 72 is the A to B equals C to D level. NXP. Okay, 1 second. Hold on. That's going to be a different symbol. Qualcomm. Where is she? Whoops. NXPI, okay. NXPI. Oh, look at this. Oh, my God. So NXPI, 81. This go intraday, too? It did. This is, so check this out. You got to love this. So this was an intraday move at 110. Oh, my God. This is cool. Okay, so, you know what's amazing, folks? Think about this for a second. The NASDAQ and the NDX 100 are still down good, and this was done in the middle of the day. You got to love it. Okay, so what we have here is this. With NXP, Qualcomm's in a lot better position than NXPI. So NXPI, even at this price point of 95.13, what it's done is come into its downdraft. The downdraft that we're talking about is from the October 30th of 2015. Yeah, nice move, but bottom line is that that's all it's done thus far. We go take a look at Big Blue. What do we have with Big Blue out here? So Big Blue also, oh, what the heck is that? Yeah, that's, I just pulled up Big Blue. It looked like it went to the moon, but it didn't. That was a bad tick at 165. So Big Blue has a bad tick out there, and when you do take a look at it, in fact, I remember now, I heard Dave talking about this in the prior hour. And you know what is so wild, folks, is this, is that, and Dave was talking about this, that it seems that when you are at, tops and when you're at bottoms, you see this phenomenon a lot, meaning that you see these monster ticks come out, these bad ticks come out. And I've never, quite understood it, but pay attention to it because it happens. And it happens. I can't do it a blanket statement, say all the time, okay? But bottom line, it happens. And a few tigers figure that that's not bad. And it's all relative as to what we all think is good and bad. There's no doubt about that. 877-927-6648. Let's go take a look at the euro. So the euro out here is trading at $100.12. This also has been sideways movement. And between this and the dollar, it looks to me still the euro wants lower price. And one of the main reasons is that on the 26th of August, as well as Brexit, you get big volume. You have sellers inside the euro when laying out at this 112.5 price level. That's kind of how this whole thing is set up. If we go over to the XAU, the HUI, first the XAU, the Philadelphia Gold and Silver Index, that's a flat market out here today. It's down 59 cents. Really, that's a sideways market. The Gold Bugs Index, the HUI, also a sideways market. That's down $1.20, but you get an inside day in both of them. Thus far, if we take a look at this on the weeklies, what you're going to have on the weeklies right now, that's sideways also. So they're not giving much a clue as to which way they want to go. A dollar index, same type of setup, meaning my take is that the dollar does want to go higher, but guess what? It's going to need some wide price spread. It's going to need the volume to get up into higher highs. Friday, coming into Friday, you can expect volatility out here tomorrow. If we go over, let's go over and take a look at the DAX, because what we did have out here today is this. So picture, the DAX in Germany was closed when the news came out about folks, counterparties, basically, taking money out of Deutsche Bank. The DAX closed down 32, but inside the DAX, the Deutsche Bank was actually up today. Deutsche Bank was up 11 cents. And, 1 second, there she is. But, of course, she trades also inside of the U.S. And inside of the U.S., that went, DB, 1 second. You'll see when that went down, this just about came out of nowhere. And, it came out of nowhere at 12.20. So 12.20, Deutsche Bank goes from a price point of 12.33 down to 11.18. And monster move lower. But what you also have is you have the volume moving with it. Now, if we go over to the SPY and we take a look at the SPY, what you're going to see is that you've already done 104 million shares. That means it's going to bank in at about 121. That's going into a swing point with 78. So that's saying that you're going to have follow through. If we look at the Qs, the three Qs were already at 24 million. You're going into 20 million. So you're going in there with force. The Qs right now are at $118.09. Now, the Qs have to close under $118 in order to be in the lower range. The diamonds, we take a look at the diamonds. Diamonds are down right now on 2.9 million. That's going into 3.7 million. So the diamonds actually need more volume on the way down. Now, the Dow Industrials itself are, in a much lower range. Let's see, 181. The Dow is almost in the lower range that you can make a case that will go after the June low. Let me actually pull this up again for a second. I had the diamonds up. If we put the Dow up, that level would be, it needs about another 100 points. But 18,107 gets you in the lower range. That we had broke out of the lower range on July 8th. The bottom of that breakout is 17,971. We look at the Russell 2000. What we have with the Russell 2000, that's down hard today. So that's down 14.5. Let me pull up the IWM for a second. Yeah, you get an expansion of volume in the IWM too. And that couldn't make the gap down either. So IWM 124.21. This is pretty cool. The IWM did test its September 9th gap, failed on price, failed on volume. You stay right there, folks. We'll come right back. Dow Industrials are down 146. Nasdaq's off 37. S&P's are down 14. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now off 158. You get the Nasdaq off 41. S&Ps are off 15. And if we, there we go. We are at, this is a big number. Yeah. You're at 751 right now in the NYSE. That's saying that the NYSE could come in at $1 billion, which is going to, that'll be pretty wild. We haven't done $1 billion for a while. Nasdaq Composite is at 1.648. That's saying that's going to come in at about 1.9. So you're coming down. You're coming down with some force in this marketplace, and we'll see how this thing shakes out overnight. But I suspect overnight. Let's go look at the FTSE actually. So if we look at the FTSE was up $70 today. It's right at its highs too. The high in the FTSE last 6 months is 69.55. We hit 69.41. So it's going to be a test of the highs, and it's going to give it up. The DAX in Germany. Yeah, see, the DAX in Germany, they're selling off the DAX. It's wild. Yeah. DAX is getting sold off. We go over to Hong Kong, since Hong Kong's going to be open in about 5 hours. Hong Kong last night was up $119 at 23.70 at 739, and that got into the gap, same gap that we're dealing with here. The bottom of that gap is 23,914. We hit 23,828. Doesn't look to me like it's going to do it. The Nikkei in Japan. Nikkei in Japan was up 228, and that couldn't get to the gap either. The yen, if we go take a look at the yen right now is trading out at. It got to a high today of 101.84. Right now you're at 101.09. But the yen still looks like it wants to go to higher price. Higher price in the yen, by the way, folks, is a weaker yen, which they've been trying to get in Japan for a long period of time, and they haven't been able to do that. Apple, if we go take a look at Apple out here, what you have with Apple is that it's down $1.50, but it's not a lot of volume. Apple's coming into a high volume swing low of 52 million, so Apple's going to need a lot more volume in order to break down from these levels. If we go to Amgen, Amgen's down on volume. Yeah, Amgen is at 2.9 million. You're coming into 4.5. And more than likely, you'll see it just blow that baby away tomorrow. Mylan Pharmaceutical is toast. I mean, in a big way, too. So Mylan Pharmaceutical is down $1.76. You're trading at 38.45, and you take this. This has been building cause for a monster ABC down. It looks like it's going to do it this week. The lows that it's going after, $37.59, and we'll see whether it can do it. It's been at these levels since October of 2015. You break those levels, and that is going to be a big problem child. But it looks to me like that would put it at $23. So you're right in the middle of nowhere here. Mylan came off the high of 76, First leg down takes it to 37, does a counter trend bounce to 55, and now you're hammering those lows. The low that has to be tested is $37.59. That's a high volume swing low, and it'll get tested. The real question is, does it get tested and it blows it away with volume? Because if it blows it away with volume, 76, $40, a $40 ABC down will get you a $15 stock. And guess what? The high of the low in 2009 was 11.55. This stock, this thing got problems. Big problems. And I suspect, you're talking about poster boy, poster girl problems about raising drug prices to astronomical prices. They put this all on themselves. The third-party payer system, folks, is so insane, it's unbelievable. Because when you're spending other people's money, meaning all the insurance bills that we pay, and there's no pricing structure and no competitive atmosphere, of course they're going to go up, and they're going to go up on a continual basis. Easy pickings. Let's go take a look at Walmart, WMT. So we got Walmart out here. Walmart is down 92 cents, 6.8 million shares, and that's got an expansion of volume too. That's going after 70.30. This is going to be an interesting 2 days in front of us. What is no doubt what has happened thus far, meaning the last week and a half, just give it a day, we're either up 150, down 150. Can that continue? Yeah, it can. Do I think it's going to? No. And one of the main reasons is that this downdraft of September 9th, folks, was a big heads up. It was not only a heads up, it was a larger heads up when the S&P couldn't get above it, stay above it. The Dow couldn't get above it, stay above it. The NASDAQ did, and that was about the most deviant thing the NASDAQ could do. The reason being, it's like, hold on, man. We're breaking topside, and the Dow is still very close to highs. The wild card looks to me like it's still going to be these bonds. Yesterday, I was just about convinced that these bonds were no doubt going to go south once again, and with the bond market, that was going to freak out the market in general. But it looks to me like it's going to be the good old banks once again that are going to basically, throw the torch on it. And the thing that's amazing, by the way, is that it's going to be a European bank, but Deutsche Bank is just not a normal European bank, folks. It's a monster. It's a monster. And more than likely, it's going to be, whether it's true or perception-wise, it's going to be counter parties risk let's go see MS. Let's go see our own banking structures. Morgan Stanley's not bad. That's just a sideways move. JP Morgan thus far is really only a sideways move too. You get a sell down, but thus far it's only a sideways move. Goldman Sachs and ABC down. Goldman Sachs getting hit out here. Yeah, you get an ABC down. Your A point, it's a small one, but you get A point of 169. Your B's 159. Oh, that's $10. That's 153. If we put this on a weekly, on a weekly it wants to go to 153. And if it breaks into 153, then there's real problems, because then 139 opens up. And this is the same consolidation it's been in since September of 2008. If you take a look at this on a monthly basis, you're really going to be able to see what a supply line can do to an equity. This supply line is pretty intense. And the supply line that we're talking about is at 172. Straight across that supply line, there's just so many people that are still caught at highs at 172, at 230, at 218, all of the above. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow's down 166, 65. S&Ps are down 15. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is off 173. You get the NASDAQ off 43. S&Ps are off 16. Percentage-wise, you're still not that bad of a downdraft. You get the Dow down 0.9%, S&Ps down 0.6. NASDAQ composite is down 0.8. The IBB continues to get into lower price, and the juice is behind this move. So the IBB, you're down 874. You're at 286. This is a classic test of the high, couldn't handle the high. Last time we were up at this high, you had 3.2 million shares traded on August 2nd. You come into it with 1.1 million shares, and then you're coming off the high with an expansion of volume once again. Guess what? You have that going on. You have more sellers than buyers, and what's laying out here in a big way is that high volume low that was generated out here from Brexit. The 27th of June is also another benchmark across many of the indices as well as many of the equities. And if you have an equity that had busted to a higher high in out of the consolidation, and then bust back inside it, get out of the way. Get your stop in, and don't let it go all the way down there, because the bottom line is this. When you come back inside a range, it's just like a 3-level house, a 4-level house, 5-level house, whatever that is. Bottom line is that when you go to the next level, if you go up and you stay up and you get away from that level, guess what? You're going to go higher. But when you go down and you get back inside the next level down, you're going to go to the bottom of that level. That's just kind of how gravity works. And, I know it sounds so simple, but the bottom line inside the marketplace, many times it's a lot, it's simpler than we actually realize many times. That's just how it shakes out. Why? Because fundamentally what ends up happening as the markets are going down, something has to save it. And what's going to save it, and what does save it on a continual basis, are support levels where funds come in, they buy at those levels, but guess what? What you have, and this is a good heads up out here today, because we are in window dressing. And as I said yesterday, you can get window breaking, and it looks to me like it's going to be window breaking because the momentum, coming into tomorrow, which is the end of the month, is down. So what also tends to happen is this. Let's put yourself in a money management situation right now. You're up, and even the funds that are up, they're only going to be slightly up because we've gone sideways for such a long period of time. They're sitting there saying, should I take my money right now? Should I let it ride? I get another day. Am I going to go from a positive to a negative? So if we go look at the S&P, so watch this. This is crazy. If we go look at the S&P, we have to look at, let's see, June, July, August. July 1st. So here we go. July, you're going to love this. July 1st. There it is right there. So July 1st, 2108. That's where we started the quarter, or that year, 2154. We were at 2119 at Brexit. So money managers sitting there right now saying, okay, do I want to be, and that's saying that you just have the index. There's plenty of equities that are a lot lower that haven't followed the index. That's saying that you own the index. And they're going to make that. They're going to make that call. They're making that call right now. They'll make that call tomorrow. Do they want to stay in it or get out of it? We take a look at U.S. Steel. U.S. Steel's down $1.08, $19.04, and U.S. Steel. Bottom line, and this is a market deal. A bottom line is that the U.S. Steel. That's down on some juice today. That's saying that U.S. Steel is going to try to pull back into 1686 instead of getting up into this $23 level. You stay right there, folks. We'll be coming back with some numbers for you. Dow Industrials right now down at $191. You get the NASDAQ off 47. S&Ps are down 19. We're going to break back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 195. NASDAQ off 49. S&P's down 16. Gold contract flat at $1,324 an ounce. Silver up 2 cents at $19.15 an ounce. Copper flat at $2.18 a pound. Light sweet crude up 60 cents, trading at $47.65 a barrel. Notes up 2 ticks, 131.16. Bonds are up 10 ticks, 169.18. King dollar up 124 ticks, 95.46. The euro is trading at $1.12, and the yen is trading at 101.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So bottom line, folks, yesterday it tries to get, well, yesterday it did. The SPY did get into the gap from Monday. Today, it was trying to get into the gap from September 9th. That's your benchmark. That's where we went, that downdraft occurred. Bottom line, failed on price. Monster volume. Yesterday, you tried to make a high out here with 87 million. You're down with 121 million. You're down $1.89. That is saying that you're going to see the SPY go right after the swing low here of $212.21. And I expect what we're going to actually see, that's not that far away from where we are, is that it's going to try to crawl into this area tomorrow. The Dow Industrials, same type of setup in the Dow Industrials. The Dow had got above the gap from Monday, then gave it up in spades. You're down 195 bucks. You're trading at 18,143. That's the 18,143 is actually also bringing it not only just to the failure, it brings it into a whole other level, meaning a lower level, because the Dow Industrials had broken topside, folks, on the 8th of July. That's when it takes off. Bottom line, you're right back into that lower range, and that does set up a 17,063 number, and that is the high volume swing low from Brexit. Now, the NASDAQ composite. The NASDAQ composite and the NDX 100, guess what? They're back inside the lower range again. So you get another false breakout, and this false breakout is pretty intense. The reason being is that we broke topside on the 21st rather. That's when the Fed did not raise rates. The composite breaks out of consolidation that's been in, stays outside of it for 2 days, comes back inside of it for a day and a half, gets back outside it yesterday, and then just gives it up. And you know what the difference is, though? Gives it up with volume, folks. Now you're coming off the highs again, and you're coming off the highs with volume. NDX 100, the 3 Qs, same type of setup. The 3 Qs closed at $117.84. Anything under $118.03 got you back inside the lower range. Yesterday, you went higher with 14 million. You can see the correlation. Bottom line, no one's in the store up at these highs. Pure distribution. When you're coming down, the volume is expanding in a huge way. The Qs now will go after the swing low that was established out here on the 12th of September. That swing low is $113.65. Gold contract. What do we have with gold? Sideways moving gold out here today. You did 144,000 contracts. You're at 1324. I expect gold is going to go after this lower swing point here at 1305. Silver, same type of setup in the silver market. Silver right now is trading up 3 cents. You did 52,000 contracts. And, you know, silver, we have to watch like a hawk tomorrow, because silver actually looks like it's set up an ABC structure on the way down, and it doesn't have to get too much lower in order to break that B point of an ABC structure on the way down. Let's go over, and because there's no doubt the financials were taking things south out here today, and what the financials have done, the XLF, thanks Terry, appreciate it. The XLF came down, and it's going down into, actually it's an ABC down. Look at this, yep. 1 second. 61 million, 62 million. Amazing. Okay, so the XLF's a confirmed ABC structure on the way down, folks. What it's done is this. So the high of the XLF is $20 this last 6 months. It got down to the price point of $19.12. It goes higher, does a counter trend bounce. Tried to break the B point on Tuesday. It broke it, but it didn't break it on volume. Guess what? Complex ABC structure down. Blows it away today on volume. You're talking about an XLF that can make its way down to $17.31 now. So there's going to be some pain inflicted inside the banking structure. Oil market. Let's go take a look at oil. Oil saved the market yesterday, no doubt. Oil market out here today You went to $48.32. Right now you're trading at $47.66. And this oil market, has to take out that swing point of $48.38. Until it takes out the swing point, the consolidation's still on. You can make the, $47.45. It closed over the highs of yesterday, so that's still saying it can make that run for that $48.38. Notes and bonds, folks. Notes and bonds, bottom line, they look like they're going to basically go higher again, and they're not going to break down once again. This is pretty intense because the 10-year is pushing. The volume's not great, but it's still 1 million contracts, which is good. The 30-year is still needs a lot more force in it, but the way that the 30-year traded today, meaning what the 30-year actually did, is that it got to a lower price point. It was coming into 246,000 contracts. It did 236. And I'm going to give it the benefit of the doubt that it wants to at least test the 171.01. And right now we're at 169.19. We go over to King Dollar. We take a look at King Dollar. King Dollar is going to need more price spread, more volume in order to get the higher price. What King Dollar has done on a consistent basis is it continues to reject lower price. It has lighter volume. So when you pull that together, it looks to me like more than likely it's going to be good old King Dollar wanting higher price. That's going to put more pressure on these markets. This is Tom O'Brien. This is TFNN. You stay right there, folks. To come right back. Dow Industrials finished down 195. NASDAQ off 49. S&P's down 14.5. We're going to break back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And, we were just talking about the XLF, of course, which is the financials. If we go over and we take a look at Wells Fargo, you're going to see Wells Fargo is breaking out lows, has volume behind the move, done 44 million shares today, almost 45 million shares, down 94 cents. And if we take a look at this, you're going to see this is really going to be a little problem child here. So the Wells Fargo itself had two high volume lows. The first one was established in February of this year at $44.50. The second one was established in June or July 1st of this year at $44.50. Both 50, let me say. Yeah, both 50. So we took that baby out today. We have 128 million shares versus 142. That being said, guess what? You have another trading day in the week. So it looks like you're going to take it out with volume, and then with that setup, that's going to be a confirmed ABC structure on the way down. Your A point on this is $56. Your B point is 44. So not the end of the world, 12 bucks. Your C point is 51, 41. That's 39 bucks. That's where this thing. That's a to B equals C to D. Let me see what's the $39. So 39 bucks, 34 is support. So, this thing looks to me it's going to go to 34. There's really. Well, you get the highs of October of 08 at 38. I don't think that 1 month could save it, though. It looks to me like when you get this breakdown, we're going to see Wells Fargo down at that $31 pretty quick. Because the $30 level should be able to basically save it somewhat. We go over and take a look at Bank of America, BAC, because one of the things inside the banking structure, which is going to be kind of interesting to see how this shakes out in the next few months, is this. Wells Fargo. So the deal with Wells Fargo is that they opened 2 million accounts fraudulently. They're blaming 5,400 people that they fired for doing it. And it's like, okay, are they the only bank that does that? It's going to be a mind blower. Most times that when you see a scandal that is that large, folks, it seems to be baked not just in the one part of the sector. Most times, if we see a mortgage scandal, all the banks are in the mortgage scandal. You see the foreign currency scandal, it's just kind of how it goes. And what ends up happening is that when it gets institutionalized like that, plenty of those people don't even figure they're doing anything wrong. So we'll see whether that's going to spread to other banks. If we take a look at Bank of America right now, Bank of America is trading at $15.16. And let's see how this is looking. So this right now looks like it wants to do an ABC down. Yeah, well, and what we also did, we also got back in the lower range. The lower range being anything under $15.30 sets it up that it wants to get down to Brexit also, which is at $12. BRK. So let's go over to Berkshire Hathaway because Berkshire Hathaway is the largest owner of Wells Fargo. They own over 10% of it. And Berkshire Hathaway also just did an ABC down. So check this out. This is going to be wild. Berkshire Hathaway is actually going to be down at the Brexit lows before the financials are. So Berkshire Hathaway is down from $151. You're at 143. Your B point on this is at 144. 151, 144. So you get $7, which is going to bring you down to 138. 138 is the number here, man. This is going to be wild watching how this shakes out. Because what you still have, let's go see exactly what good old Warren Buffett is up to. So right now, Yeah, Warren Buffett owns 504 million shares of Wells Fargo. That's how about that? That's $500 million. Actually, just look at this. This 500,000 shares. 51. Yeah, that's pretty intense. So you're talking about billions of dollars, and you're talking about billions of dollars that have been lost in Wells Fargo. Period. So in the course of 2 weeks? No, the course of 1 month, we've lost $7. And $7 with 5 billion shares outstanding. There you go, $35 billion market cap down the drain. Pretty intense. Goldman Sachs. Let's go over to Goldman Sachs and take a look at Goldman Sachs. Goldman Sachs also an ABC structure on the way down. This is, I don't expect we're going to have a market like we did in 2008, but this is definitely, once again, banks taking it south. And what does happen is this, folks. What I've seen in the banking sector is that the banking sector takes a long period of time to break down. But when the banking sector does break down, get out of the way, because it's not just going to be the banking sector that's going south. Let's go take a look at the XLE, which got a huge boost yesterday. XLE yesterday, when the Saudis said that they had a deal to reduce the amount of oil that they were that OPEC was going to reduce. So the line yesterday, folks, intraday, before the 4 o'clock announcement, was that OPEC made an agreement that they were going to reduce their output by 750,000 barrels a day. By 4 o'clock, they came out with some kind of an official announcement that they had an agreement. By 5 o'clock, what ended up happening is that they did have an agreement, but by 5 o'clock, what ended up happening is that they said that, well, the agreement really is not going to get straightened out and on paper until November 30th of this year. This morning, it comes out that now they're talking 500,000 barrels versus 750. So bottom line, buyer beware, because it's been 8 years since they've been able to agree on anything, and we'll find out. We'll see whether they can agree on this, but thus far, the history is that they won't be able to agree on it. Now, that being said, XLE, you had the price spread yesterday. You get over the swing point that was established out here on the 22nd of September, and we'll see whether it can get up and over $70.26 this week. Because if I bring this back and put this on a weekly, what you're going to see is that that's the number that, yes, 70.75. Because thus far, when we came down from 7.75 2 weeks ago to 67, we came down with 107 million shares. So bottom line has to get up and above that, and in order to basically get higher traction. If we actually go take a look at the oil market itself, what we had with the oil market is that it was up 68 cents today. The swing point that oil has to take out is $48.38, because what hasn't happened yet, it hasn't got over the swing that was established on the 8th of September. And so what that still has for the last 6 months is that we have 5 lower highs since oil hit a high of $53 on June 9th. You stay right there, folks. We'll come right back. Dow Industrials finished down $1.95. You had the Nasdaq off 49. S&Ps are off 14. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at a few more of the Dow stocks out here. If we start with GE, this is going to be really dangerous for the Dow Industrials. For GE, it's definitely dangerous, and this is what it is. So General Electric, folks, was one of the first stocks off its high. The high in General Electric, the last few years, $33. That was established out here on the 20th of July. So we're at $29.53 right now. GE, and this is one of the benchmarks. Brexit. So Brexit was the 24th of June. You had the 24th, the 26th, and the 24th and 27th. Yeah, so the 24th was on a Friday. That the market came down. That's where the market had bottomed before this bounce. That's a high volume, low bottom. So GE is one of the first stocks back to that bottom. And if you take a look at it, what you're going to see is that you had an expansion of volume today, and a big expansion, by the way. The expansion of volume today, we did 38 million shares. Yesterday, you tried to go higher with 26. Now, you're coming into this low, and this is where the danger comes. On the weekly basis, what we've done is that you're coming into 216 million, and we've done 116 million. So you're not going to get the volume in the weekly. We're not going to get 100 million. What I do expect you're going to see, though, is that, guess what? You are going to get into this $29.17. The reason being, we're so close to it. So how we get into that is going to be a big number, because you break that number, that'll get GE down to $27.10. Now, GE has never been a good-looking stock. If you take a look at GE, what you're going to see, when I say, I'm going to give you a comparison. So GE, we pull this back. We can pull this back 15 years, and what you're going to see, I might as well pull it back. Let me pull it back 30 years. So if I pull GE back 30 years, what you're going to see is that GE was traded at this price in 1998. 1998. So GE goes all the way up in 2000 to $60. 2002, it's down to 23. Does another counter trend bounce to 42, and then gets to $5, I think. Let's see, is it 8? Yeah, it's $5.72. So the bounce right here is still just a counter trend bounce. Now, let's go to one of the strong stocks, and have been strong, and that's Nike. Nike is down to $1.09 today. Nike's also coming into Brexit, which is $51.46. Now, Nike had already gone from, when it did this counter trend bounce, from $51 all the way up to $60, so 50 to 60. It comes out with numbers. Their quarter was great. Their guidance going forward was not. So what does that set up? Well, it sets up a couple of different things. The biggest setup is this, is that this is also going to now go after the Brexit low, which is $51. And we're coming into that with big volume. And if Nike's going to break down, folks, guess what? You're going to see a lot of equities break down and break down very quickly. The reason being is that Nike's been one of the strongest performance in this market. Nike was trading at 2009 at $9.56, makes it run to $68, and now you basically pulling back, and it has some volume on that pullback. So these numbers inside the Brexit day are important. If we go over to the SPY, we take a look at see what that number is. We're at $214. The low in the SPY is 198. Now, I'm going to put this on a weekly so you can see how this shakes out. So, on a weekly, what should happen is that the high of the low should give you some support. And if the 210 level doesn't, then that's a huge problem. Because the high of that low that week is $210, the low is 198. And what ends up happening when you do have high volume lows or high volume highs, on a high volume low, it's terrible because you have a high volume low and wants to get tested. The good news is that if you get above that and you start coming back into that, it's going to be, this is on a weekly basis, it's going to be the top of that week that will give it support first. If you get into that number, then see you later. It's going to, I mean, most times they do, too. It just depends on how many times you have to come down to do that. So I suspect right now what we do have is that, one more day. See, tomorrow's going to be a big day. Well, every day is a big day, but tomorrow's going to be a big day for the SPY because the SPY is not inside the lower range yet, the whole lower range. On a weekly basis, the SPY would have to come down about not much, another 50 cents. And then on the weekly basis, you're inside the lower range. We take a look at the Qs, the 3 Qs. We'll do the same type of exercise on the 3 Qs. We take this back, and what you're going to see inside the 3 Qs, the 3 Qs have to get back. They have quite a while to get back inside a weekly basis. The daily basis, they're already failed. Weekly basis, have to get back inside $116.75. Now, they can do it like in a heartbeat. There's no doubt about that. If we take a look and we put this on a monthly, what you're going to see is, see, this is pretty intense. If you actually set up channels, what you're going to see, this is a classic. Actually, I got to make this 1 second. If you set up channels inside these indices, I believe what we're going to see is that when we broke with conviction, it didn't come back up to the channel. So when we broke down, when I say it broke down, this goes all the way back a year. See, this is wild how this. So August of 2015, folks, was your first break downtown with conviction. And what that is, you have wide price spread, you have accelerated volume, and thus far, we've been going sideways since then. It's trying to get back up where the trend line that actually broke from and hasn't been able to do it. Now, when you set this up, watch this. This is crazy because when you actually start setting this up and then you set the top of that range up, the top of that range is the $116.47. You get back inside that again, and then that sets up. Guess what? That's on the Qs. That sets up. You can go to $84. If we do that in the SPY, what you're going to see, the SPY and the Dow. Now these are really sweet little deals, trend lines when you set this up, because you're going to see that the break is extensive. The break that we had in all these indices is pretty extensive. The thing that you can get out of this is that how long it takes to actually break down once you even do break down. Now, the SPY never even got close to coming back, testing the backside of the trend line. This is pretty wild. You can almost go back to December of 2014 and we're at the same level. You stay right there, folks. We'll come right back. Dow finished down 195. NASDAQ off 49. S&P's down 14.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. If we go over and take a look at the Fed Fund futures rate, this is the probability of when the Federal Reserve will go up on short-term rates. Right now, December 14th is still game. That's at 52.7%. Now, this fluctuates around a huge amount, actually. Last 3 days, it's been fluctuating between 52 and 58%. November is at 17%. You have February at 55. All of next year is after February is at 60% or over, looking to get into higher rates. If we go take a look at the XLU, okay, so the XLU is the utility sector, folks. And inside the utility sector, what you have, you're talking about stocks that folks buy, and they buy that for the dividend. You're talking Duke Energy, Southern Company, Dominican Resources, America Power and Light, PG&E. Bottom line is that they're interest rate sensitive equities. Now, this here is trading at $49.33. You're down off a high of 52 or 3, I believe. Yeah, 53. Let's take this. Okay, so this just put its head back inside the lower range also. So this is this broke out July 1st, a week of July 1st. Oh, this is crazy. So this has a high volume swing low too at 48. Going to be interesting to see if in fact this can get to 48. Looks to me like it's going to number one, but see, this is going to be this one here. This is what's really tricky about the bonds right now. The way this is trading, the XLU, it doesn't look to me that this bond market is going to implode just yet. This is amazing, actually. So the swing high that was established in January of 2015, we had 274 million shares traded. We went into that with 400 million, and then we got over it with 383. Yeah, so this is just a normal pullback, man. Oh, this is a heads up. This is crazy. So guess what? This is saying that this is a heads up that yes, we're at 49.33. It can go to 47, 46, but that's still saying that this bond market is not done. And what has happened here, so let's go look at the bond for a second, because I want to show you something. What has happened is that if I take a look at the continuous bonds, I'm going to put this up on a year basis, what you are going to see is that, you know, we broke topside in a huge way last June, okay, June of this year, actually. That being said, when bonds go south, they have gone south very quickly. And then they just repair their damage and go right back topside. You know, so if we take a look at the rates, we're at 1.5 right now on the 10-year. And around the world, you know what? They're still very small. The Netherlands is at minus 1/10. Switzerland is at minus 0.5%, which is just amazing. That's on the 10-year. We take a look at the 5-year, and negative rates are in France. So check this out. This is pretty sick. France and Germany are negative 0.5% on a 5-year bond. So you're paying 0.5% per year to own a 5-year bond. Amazing. Sweden is at 0.3%. Switzerland's at Switzerland's almost at 1%, 0.9%. And then if we get down to, this is where it really gets bizarre, because if you get down to the 2-year note, what ends up happening is that France, of course, is in negative rates. Germany's in negative rates. Spain is in negative rates. That's really bizarre. Italy's in negative rates. We know Italy's broke, and so isn't Spain. Great country, but they're broke. Well, it looks to me like it's not going to be the bond market going up that was going to put the market in a little turmoil here. It very well may be the Deutsche Bank deal. So Deutsche Bank out here, this was intraday, folks. What happened intraday at 1:10, is it 1:10 this afternoon? Yeah. No, at 12 o'clock this afternoon. At 12:20 this afternoon, came across the wires that counter-trend parties were basically taking cash out of Deutsche Bank. That's the first part. The second part is a little bit bigger, and what it was is that when you are a counter-trend party, you can do a couple of different things. You can take your money out. What also ends up happening is that inside many contracts, the counter-trend party can say they want more collateral. And in order to get more collateral, there's a mathematical formula inside the derivative that would happen to. But if you remember, that was a huge contention in 2007 and 2008 as to what the collateral was and what the collateral was worth. And this is why, folks, in some of these derivative contracts, they're illiquid instruments, and in the contracts, not all contracts, but in plenty of the contracts in 2008, it was up to the counter-trend party, and the counter-trend party most times is going to be the party that sold the product, okay? You remember Goldman got accused of 1 million of them, that Goldman was basically banking on telling some people that the mortgage market was going up, and simultaneously they were putting the big shot together for John Paulson that the market was going down, okay? So what ends up happening on a counter-trend party collateral aspect is that, okay, what is that bond worth? Let's just say it's in the bond market. And that wouldn't happen if the counter-trend party, if you're just talking about treasuries and notes, because they trade every day. They trade by hundreds of billions of dollars. What does happen is that there's plenty of bonds that don't trade at all. And the question there is that what is that bond trading at? What is that bond worth mark to market? And then on top of that, and this is where it gets really dicey, it's, let's say you have a bond and it doesn't trade that often, and the bank wants to call the bond in. Well, one of the quickest ways to call a bond in and on a counter trade is to turn around and you make a trade, and guess what? That trade is detrimental to the whole agreement. You know, does it happen? I suspect it happens, because what ends up happening is that it depends on what's in the contract and what the trade is triggered. So what ends up happening is that the counter-trend party themselves, if they wanted to call a bond in, they could eat a certain amount of money at the beginning, saying, okay, we need a nice trade going off, you know, a good-sized trade, but we want it coming off at a lower number, so that the person on the other side is getting a good deal, but that has nothing to do with what the actual party is trying to do in the trade. You'd sell the bond at a cheaper price, and as you're doing that, bang, you got the other side of the trade, and the other side of the trade is worth 10 times the amount of what you just lost on the first trade. You stay right there, folks. We'll be coming right back. Dow down 195, NASDAQ off 49, S&P's down 15.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Costco just came out with numbers. So the estimate was, their revenue estimate was $36.9 billion. They come up short with that, $36.5 billion. So top line is shot. Bottom line, the estimate was the earnings was $1.73. They come up with $1.77. Costco closed at $147.49. Right now, that's trading at. That's interesting. It looks like it's 150. Yeah, I'd say it's 150. So it was down $1.93 today. It looks like it's giving the 193 back. That's not going to help them too much. Costco's down off a high of here, $169, and this has been a heck of a run for Costco anyway. Costco in 2009 was at $34, runs up to 100, and look at that, 169. That's a nice move. The problem with Costco is that you came down off the high with volume. Now, this is going to be a big number. Costco came down in May with 69 million, makes a low of 138. And we're coming down this month with big volume. So Costco's going to go after that swing area of 138. You break that 138. And, you know, a lot of these equities, folks, if we actually break down out of this consolidation that we've been into about 2 or 3 years, it's going to be a huge problem. Because there's not much, because of the way that we went up so dramatically, a straight line, there's not a lot of floors inside many of these equities as they went to higher price. And floors are crucial to stop downdrafts inside the marketplace. You know, that's how markets basically can get their footing once again, build little cars once again in order to get to higher price. Because what does happen inside sideways movements, which we've had, is that on a sideways movement, the earnings, the revenue, you know, I'm going from a technical to a fundamental deal here, but that's a sideways move, give equities time to catch up with the fundamental aspect. Because the bottom line is that for markets to go higher, guess what? You got to make more money. It's not just about the aspect of paying dividends and doing buybacks in order to keep your stock higher. If we've seen anything, in fact, it came out today. Now, this is pretty intense. If we go to Wells Fargo once again, what did happen in Wells Fargo is that it was 3 years ago that this investigation has been going on about the Wells Fargo basically opening up 2 million fraudulent accounts. Simultaneously, what also ended up happening is that the CEO Stump and more executives was selling into the market as soon as this came out. Now, it's not as deviant as it sounds at the beginning, and this is why. And I'm not sticking up for him at all. I think the guy's a puke myself, okay? But what it is this, is that there were options that were in play that could get vested right at that same time. So what ended up happening is that the investigation started. Right after the investigation started, the options were getting vested into the executives. Well, Stump turned around and sold huge amount of his shares. And what does happen, folks, is that when you get an option that's vested, it's a taxable event. So you do have to pay tax. So he's saying that, hey, I had to pay the tax on it. That's why this is done, which is a legit deal. The timing of it is still a problem because you have to say to yourself, okay, did the stock go up that high? Because it was a $28 option. Did it go up that high? Because they were opening so much bad accounts. Have a great one. Have a safe one. Look forward to speaking tomorrow morning, folks. Go get them.